If money is on your mind for 2024, we may have some guidance for you. Steve Wyett with BOK Financial is here once again to give us a broad financial outlook for 2024. Good morning, Steve.
Good morning, Dave. Glad to be here.
You know, we're happy to have you here. I do want to start with inflation. It seems to be going down. What's the general outlook for inflation in 2024?
You know, we've been talking about inflation for the last year, Dave, and the good news is the trend is still lower. We got recent news on the CPI and PPI that inflation's continuing to trend lower. And here just recently, consumers are getting a bit of a break because gasoline prices have been falling. So we're anticipating that to continue. Here's the hard part. Inflation coming down doesn't mean prices are going back to where they are. And so consumers are still dealing with this stress that since 2020, the overall CPI on a cumulative basis is still up like 19%. So those of us that have been to the grocery store recently, we've just come through the holiday season, we know as we prepared for that, man, it was a lot more expensive walking out of the grocery store than what it's been for a while. So the good news is price increases have slowed. We're not looking, though, for prices to go back where they were.
A total regression.
A total regression. That would take actual disinflation or even deflation, and that's just not what we're anticipating.
Right. We also have interest rates still high. It affects credit cards. It affects home loans. What are we looking at for interest rates in 2024, we think?
Yes, so the good news there is it does appear that the Fed can stop raising interest rates. We're at 5.25 to 5.5 on overnight interest rates. While the Fed was anticipating they might have to go another rate increase now, that looks like that's not going to happen. The market's building in some actually lower interest rates as we move into 2024. That's going to be a question mark for us as to just how quickly the Fed can lower interest rates. But we've already seen home mortgages, which at 8% have backed off a little bit. But as you mentioned, car loans are higher, credit card interest rates are higher. That's the negative. The positive is investors, if you have cash, have been able to earn higher interest rates on their overnight money market funds and fixed income investments, and we think that's still where there's some real value out there. But if you want to know how to make a 6% mortgage look good, start at 8. As it comes back to 6, all of a sudden that looks a little bit better than it.
Right, it's looking better. So a good year for savers and investors maybe for 2024? Are we expecting it to be another good year to save?
We are, at least from the fixed income side. The equity market, stock market's had a great year this year, at least at the index level. It's really been concentrated in a relatively small number of companies, about 10. But as we move into 2024, our outlook is for the economy to remain positive from a growth standpoint. It's a presidential election year, Dave, so we anticipate that the administration is going to do everything that they can to avoid an economic slowdown. That's deficit spending. We're doing that. We anticipate that to continue. In the short run, that's additive to growth. Longer term, Dave, we're adding a lot of debt, and it's becoming more expensive. And so this is going to be an issue as we move forward. But in the short and intermediate term, we do expect that to be additive to growth.
I did want to talk about cryptocurrency. The FTX Sam Bankman-Fried trial has been in the news. We've reported on it extensively. I mean, what is the general outlook for you with cryptocurrency coming up this year?
So the crypto markets have been, let's say, controversial for a period of time.
Yeah.
Our ongoing communication around crypto has been to speculate responsibly. The crypto markets remain speculative. The issue that came to the light with SBF and FTX as a company, they trade on unregulated exchanges. That makes the actual trading more risky. Safekeeping is more risky. So the SEC is moving towards a scenario where they're going to increase the regulation that could actually add to the safety of those markets and make them more acceptable from an institutional standpoint. But until that time, crypto remains a speculative asset class that there's nothing wrong with speculation. That's not what's going to get you in trouble. The size of your bet will get you in trouble as you're speculating.
So with folks into crypto, with banks that are into crypto, you expect maybe more regulation this year, or at least talking about it possibly?
Absolutely, and I think that's the right direction to go. That's what's going to make those markets more sustainable over a longer period of time. Look, an open architecture where there's no regulation is great until something goes wrong. So this idea that there's no central oversight is great, but you need the rules of the game. You need to make sure that there's certainty in how things trade and then how you can safekeep.
Well, Steve Wyett, as always, thank you for being here, and happy holidays, sir.
Thank you, Dave. Appreciate it.